Welcome to the deep dive. Okay, let's unpack this. Today we're looking at a real paradox in the tech world. We're diving into Rigetti Computing, that's RGTI on the stock market. They just announced something pretty huge in quantum computing, maybe even a holy grail moment, but, and this is the twist, their financials tell a very different story. So our mission today is to really get under the hood of this, understand Rigetti's big tech win, but also take a hard look at the numbers, the financial health, and figure out what this high-risk, high-reward situation could mean for you and your portfolio. Could this be a quantum stock explosion in the making or something else entirely?
Absolutely. And to do that, we've pulled together insights from all over. We're talking financial analysis from the Motley Fool, A-Invest, practical takes from Charles Schwab, market data from Market Beat, and even those unfiltered conversations you find on Reddit forums. So hopefully a really well-rounded picture.
Great. So let's start with the big news, the breakthrough that got everyone talking. On July 16th, 2025, Rigetti announced they hit 99.5% median 2-qubit gate fidelity. That was on their Anka 3 system, a 36-qubit machine. And the way they built it is interesting too, right? It's actually 4 smaller 9-qubit chips sort of linked together.
That modular approach is key, yeah. And gate fidelity, just to simplify, it's basically about how accurate the quantum calculations are. Think of it like in normal computing, 2 plus 2 always equals 4. Quantum systems are way more fragile, so getting that precision is, well, it's tough. Getting over 99% fidelity, that's absolutely essential. It's the baseline you need for error correction.
Error correction.
That sounds important.
Oh, it's huge. It's seen as a kind of holy grail. Without it, you can't really build reliable, large-scale quantum computers. And that modular chiplet thing Rigetti's doing, that's their strategy to tackle the scaling problem, building bigger machines from smaller proven parts. Looking at the bigger picture, this really boosts Rigetti in the race to build logical qubits.
Logical qubits, so not just the physical ones. Exactly. They're like robust computing units built using error-corrected physical qubits.
Yeah.
These are the things you actually need for the big applications. Things like breaking modern encryption, optimizing complex systems, maybe even designing new drugs. And Rigetti's not stopping here. They're aiming for a 100-plus qubit system with similar fidelity by the end of this year.
Wow, okay. Ambitious stuff. But their specific method, this superconducting approach, it needs things to be incredibly cold, right?
Yeah.
Near absolute zero. What are the pros and cons there?
Well, the main challenge is exactly that, the cooling. It's complex, it's time-consuming, and it's definitely expensive to run and maintain. Now, the potential upside is that this method might allow for faster calculations down the road once they figure it all out. But compare that to, say, IonQ. They use a trapped ion method.
Right, I've heard of them.
And their big advantage, it works at room temperature, potentially much cheaper, but maybe not as fast. It's still really early days. We're talking years before we know which approach, superconducting or trapped ion, or maybe something else entirely, will actually win out. Both paths have huge risks, could hit dead ends.
So it's not just about the tech itself, but also building confidence and support. Rigetti seems to be doing that with partnerships and grants. I saw notes about a $35 million investment and a $100 million manufacturing deal with Quanta Computer.
Yes, and there's more. A $5.48 million Air Force grant for chip R&D, $3.5 million from Innovate UK for error correction work. They're also in the DARPA Quantum Benchmarking Program, working with QPOCX, the National Quantum Computing Center. It's a whole network.
That sounds significant.
It really is. Getting that kind of backing, especially from government and major tech players, it's not just about the money. It signals validation. It shows that key institutions have confidence in their roadmap. Quantum computing, you have to understand, it's like a massive team effort. You need government, academia, big companies all pulling together. No one company can do this alone. So these partnerships are, well, critical indicators.
Okay, so the science is exciting, the partnerships look solid. Why isn't the stock just skyrocketing then? Let's shift gears to the financials, because as you hinted, this is where the picture gets, well, messy. Despite that 30% stock pop after the announcement, Rigetti is still deeply unprofitable.
Right, and this is the core tension for investors. The numbers are pretty stark. Q1 2025, revenue was just $1.5 million, but operating expenses, $23 million. That's a huge gap.
Ouch.
And looking longer term, annual revenue actually went down from $13 million in 2022 to $11 million in 2024. Meanwhile, net losses have just kept growing. They lost $201 million in 2024. That's way up from 2023. Q4 of 2024 alone had a $153 million loss. That's substantial?
Where's all the money going?
Mostly R&D. They're burning through cash. R&D costs are typically between $11 million and $16 million per quarter. Then add another $6 million or so per quarter for SG&A, selling general administrative costs. R&D is definitely the biggest chunk. So yeah, cash flow from operations is consistently negative. They burned through $8.5 million just in Q4 2024 from operations.
That sounds alarming. But wait, there's a counterpoint, isn't there? The cash pile. I read they have something like $575 million in cash reserves and no long-term debt.
That's the crucial buffer, yes. It's a very strong liquidity position, relatively speaking. A lot of that cash came from recent fundraising, particularly a big $350 million at the market or ATM equity offering they finished in June 2025.
So they sold more stock to raise cash.
Essentially, yes. And that big cash reserve gives them what people call runway time. It lets them keep funding all that expensive R&D and cover operating costs without facing, immediate bankruptcy fears. It's their lifeline right now.
Okay, so they have time, but the clock is ticking. How are the professional analysts seeing this? It seems split. 6 firms have buy ratings, average target price around $15.50, which is a bit above where it is now. Some even up at $19.
But then you have Zacks giving it a sell rating, and they're pointing directly at those falling revenue estimates. It perfectly captures that disconnect, right? You've got analysts excited about the long-term quantum potential, and others looking at the current weak financial performance and saying, hold on a minute.
So this really forces you, the listener, to think about your own investment style, doesn't it? Like Charles Schwab suggests, are you a growth investor or a value investor here?
Exactly. Let's break that down for Rigetti, a growth investor. They're looking at the future. They focus on potential, innovation, market disruption, strong future revenue growth, even if the company's losing money now. Rigetti, with its cutting-edge tech in a massive potential market, that fits the growth profile perfectly. It's a bet on what could be.
Okay, makes sense. And the value investor?
Well, a value investor wants a bargain today. They look for companies that seem cheap based on current financials. They want things like low price-to-earnings ratios, maybe dividends. Rigetti has negative earnings, so no PE ratio to speak of, and its price-to-book ratio is super high, over 31. That suggests it's actually quite expensive relative to its current assets. So for a traditional value investor, Rigetti is likely a non-starter, although some suggest a hybrid approach, Use fundamentals to pick a potentially game-changing company like Rigetti, but then use technical analysis, charts, and patterns to try and find a good entry point, maybe wait for a pullback. Combine the long view with timing.
Right, trying to get the best of both worlds. But let's not forget the risk. We have to come back to that. The Motley Fool puts it bluntly. Pure play quantum stocks like this, they could go to zero.
It's a stark warning, and it's echoed everywhere. The standard advice is, if you invest in something this speculative, keep it to a tiny part of your portfolio, like maybe 1% maximum. Don't bet the farm on it. It's interesting seeing this on Reddit, too. People talk about needing ballsiness or using play money for stocks like RGTI. That language itself tells you how speculative people feel it is.
And that speculation shows up in the stock price volatility. It's been a crazy ride, up over 1,300% in the past year. From $0.66 to over $21, plus that recent 30% jump. Reddit users aren't wrong calling it swinging like a monkey.
Definitely. And there's a whole debate on those forums about the hype. Is it overhyped, underhyped because mainstream media isn't covering it much? Some think it's just getting started, entering FOMO territory, fear of missing out. But then you have the CEO himself saying, quite candidly apparently, that the real payoff's 4 years away.
4 years? That's a long time in market terms.
It certainly manages expectations. It signals this is a long-haul investment, not a get-rich-quick scheme. Significant commercial success is still way out there.
What about insider activity? Sometimes that gives signals. Insiders sold almost $1 million worth recently. No buys. Though insiders only own a small slice, like 1.9%, while institutions hold over 35%.
Yeah, insider selling can be a red flag, suggesting maybe insiders lack confidence. But you have to be careful reading too much into it. Especially after a big equity raise like that $350 million one, some selling might just be executives managing their own finances, diversifying. It doesn't automatically mean they think the company's doomed. You need the bigger picture. Looking at A-Invest's summary, they seem to capture this balance. They call it a high-risk, high-reward hold if you're conservative. Basically, wait and see, look for proof of progress towards profit, or maybe another big partnership, maybe in the August 12th earnings report.
And for those with a higher risk appetite.
For them, A-Invest suggests it could be a speculative buy. But crucially, they recommend a stop loss around $12, a safety net if things go south. And interestingly, looking back, RGTI has shown some strong, albeit short-term post-earnings pops historically. An 84% win rate over 3 days after earnings since 2022, apparently.
So potential for quick gains, but still fundamentally speculative. Which brings us back to that Molly Fool idea. Maybe don't try to pick the winner. Maybe spread the bet. Like, invest in both Rigetti and IonQ.
That's a common strategy in highly uncertain emerging tech sectors. The thinking is, diversification. You can only lose 100% of your money on any one stock if it fails completely. But if one of them does become the dominant player in quantum, the upside could be, well, potentially enormous. Unlimited, theoretically.
So wrapping this all up, what does it all mean? Rigetti really is this incredible example of pushing scientific limits, isn't it? But it's also walking this incredibly fine financial line. It really highlights how tough it is in these early stages of potentially world-changing tech.
Absolutely. It boils down to that fundamental tension. You've got these undeniable, really impressive technical wins clashing with serious operational losses and that constant need for cash. An investment here isn't just buying a stock, it's truly a bet on a future that's still very, very uncertain. Exciting, maybe world-altering, but definitely uncertain. Not for everyone, that's for sure.
Which leads us to a final thought for you, our listener. Given how much money and time quantum computing needs before it's, widely useful, what other ways, besides just stock price and quarterly results, might you track the real progress of a company like Rigetti? What non-financial signs would you look for? And maybe even more fundamentally, how would you define a real-world problem that quantum computing needs to solve to prove it's truly arrived? Something to think about.